The moment my sister Sarah's assistant burst through our family's Thanksgiving dining room doors, her face pale as winter snow, I knew everything was about to change. Sarah had just finished humiliating me in front of our entire extended family, calling my cryptocurrency investments play money, while flaunting her executive position at Morrison Tech. The assistant's trembling voice cut through the laughter like a knife. "Ma'am, your major shareholder just sold $670 million in shares. The stock is plummeting." Sarah's wine glass shattered against the hardwood floor. Growing up in middle-class suburban Detroit, Sarah and I lived completely different realities under the same roof. Our father, Robert, worked the assembly line at Ford Motor Company for 32 years, while our mother, Linda, managed the household budget with mathematical precision. Every penny mattered in the Henderson family, but somehow, Sarah always seemed destined for bigger things. She excelled at everything I struggled with. While I battled dyslexia through elementary school, spending extra hours with reading specialists and feeling embarrassed when teachers called on me, Sarah sailed through advanced placement courses like they were child's play. Our parents' pride beamed brighter whenever Sarah brought home another academic achievement award. The comparison started early and never stopped. "Why can't you apply yourself like your sister?" became our father's favorite refrain during my teenage years. Sarah earned a full scholarship to Northwestern University for business, graduating summa cum laude with internship offers from 3 Fortune 500 companies. I barely scraped through community college, switching majors twice before settling on general studies just to graduate with something. Sarah's meteoric rise at Morrison Tech became family legend. She started as a summer intern, impressed the executives with her analytical mind and strategic thinking, then climbed the corporate ladder with determination that amazed everyone who knew her. 8 years later, she held the title of Vice President of Strategic Development at one of Michigan's most successful software companies. Meanwhile, I took a different path entirely. After college, I worked construction for 2 years, building calluses and muscle, while Sarah built her professional network. I drove delivery trucks, loaded warehouses, and eventually landed a steady job as a logistics coordinator at Great Lakes Medical Supply. The work suited me perfectly, organizing shipments, tracking inventory, solving practical problems with real-world consequences. During quiet evenings in my studio apartment in Royal Oak, I discovered something that changed my perspective on money forever. Online investment courses opened my mind to financial markets I never understood. Forums dedicated to emerging technologies introduced me to blockchain concepts that seemed like science fiction. While Sarah attended corporate networking events, I spent countless hours researching cryptocurrency projects, reading white papers, and slowly building my understanding of this revolutionary financial system. The annual Thanksgiving gathering at our parents' house in Bloomfield Hills had become Sarah's unofficial stage for displaying her success. This year felt particularly brutal. The guest list included our parent Sarah with her husband Brad, who worked as an investment banker at a downtown Detroit firm, their teenage twins Emma and Jake, Uncle Frank, and Aunt Marie, who lived 3 blocks away, and our cousin Derek, who ran a small plumbing business. Sarah arrived fashionably late in her leased BMW, wearing a tailored blazer that probably cost more than my monthly rent. She carried designer shopping bags filled with expensive wine and carefully chosen gifts that demonstrated her refined taste and financial prosperity. Brad followed behind, checking his phone for stock market updates while discussing their recent vacation to Napa Valley. Throughout dinner, Sarah's condescending comments grew increasingly pointed. She mentioned my 12-year-old Honda Civic parked outside, suggesting I invest in reliable transportation instead of internet fantasies. When conversation turned to current events, she dismissed my opinions about economic trends with a wave of her manicured hand. "Cade still thinks he can get rich quick with Bitcoin," she announced to the table, drawing chuckles from our relatives. Meanwhile, those of us with real financial education understand how actual wealth building works. Uncle Frank, who worked in municipal government for 40 years before retiring, nodded approvingly. "Cryptocurrency is just fool's gold for millennials who don't understand traditional investing," he declared. "Real wealth comes from steady growth in established markets." The mockery intensified when Sarah learned about my investment activities. For 3 years, I had been systematically purchasing cryptocurrency with every spare dollar from my $42,000 annual salary. What started as a $500 experiment with my tax refund had grown into something much larger, though I kept the details private. Maybe when you grow up, little brother, you can afford real investments like real estate and blue-chip stocks. Sarah continued, her voice dripping with sisterly superiority. Until then, keep playing with your imaginary internet money. Then came her bombshell announcement that silenced the entire dining room. Morrison Tech was about to close the biggest deal in company history, a $3 billion acquisition of TechFlow Solutions, a smaller software firm specializing in artificial intelligence applications. Sarah owned 50,000 shares through her executive compensation package, worth approximately $2.4 million at current market prices. This acquisition will revolutionize our industry, she explained with executive confidence. TechFlow's technology combined with Morrison Tech's distribution network will create an unstoppable market leader. My stock options will vest completely when the deal closes next month. The family erupted in congratulations and toasts. Uncle Frank raised his beer bottle high, praising Sarah's business acumen. Aunt Marie clasped her hands together, marveling at her niece's financial success. Even the teenagers seemed impressed by the enormous numbers their mother casually mentioned. Sarah always knew how to pick winners. Our father beamed with paternal pride. She's got the Henderson family gift for smart investments. As family members competed to offer the most enthusiastic praise, I continued eating my turkey in silence. 3 years of research had taught me that individual stock concentration, especially in technology companies, carried enormous risk. But pointing that out would only invite more ridicule about my amateur investment knowledge. Brad joined the celebration by explaining how sophisticated investors like themselves avoided volatile garbage like crypto. He described their diversified portfolio of traditional assets, municipal bonds, dividend-paying stocks, certificates of deposit at their local credit union. Everything Sarah and I had been taught growing up represented financial security and responsible money management. What my family didn't know was that my imaginary internet money had grown to $85,000 through careful research and patient accumulation. While they mocked cryptocurrency as speculative gambling, institutional investors were quietly building massive positions in Bitcoin and Ethereum. Major corporations had begun adding cryptocurrency to their treasury reserves. The technological revolution I'd studied for 3 years was finally gaining mainstream recognition. But revealing my success would only provoke more skepticism and accusations of luck rather than skill. Instead, I absorbed their criticism while mentally reviewing the research that convinced me blockchain technology represented the future of finance. Sarah's confidence in Morrison Tech's traditional business model seemed increasingly outdated compared to the decentralized systems I'd been studying. The evening's cruelest moment came when Sarah announced that she had convinced our parents to invest their entire retirement savings into Morrison Tech stock. Robert and Linda had liquidated their carefully built portfolio of mutual funds and bonds, redirecting $120,000 into a single company based on their daughter's insider knowledge and professional recommendation. Sarah explained how the acquisition would double or triple our investment within months, our mother said proudly. We're so grateful to have a financial expert in the family who can guide our decisions. I felt my stomach clench as the implications sank in. Our parents, who lived through multiple market crashes and preached diversification throughout my childhood, had abandoned decades of conservative investing principles. Their entire financial future now depended on Morrison Tech's continued success and Sarah's stock predictions proving accurate. The weight of their misplaced trust created a knot in my chest that lasted long after dessert was served. While family members discussed vacation plans funded by anticipated stock gains, I wondered how long their celebration would continue before reality intervened with devastating consequences. The immediate aftermath of Sarah's announcement transformed our family gathering into an impromptu financial celebration. Uncle Frank proposed an elaborate toast to Sarah's business brilliance, while Aunt Marie peppered her with questions about investment strategies for ordinary people. Even Cousin Derek, who normally avoided financial discussions, seemed captivated by stories of corporate acquisitions and stock option windfalls. Sarah basked in the attention like a performer taking curtain calls. She described boardroom negotiations with venture capitalists, strategic planning sessions with Morrison Tech's executive team, and exclusive industry conferences where multi-million-dollar deals were structured over expensive dinners. Each story reinforced her position as the family's undisputed financial authority. Brad amplified his wife's credibility by sharing war stories from his investment banking career. He explained how professional traders identified undervalued assets, structured complex financial instruments, and generated consistent returns through sophisticated market analysis. Their combined expertise made my cryptocurrency research seem laughably amateur by comparison. Cade's problem is he doesn't understand risk management, Brad declared while cutting his pumpkin pie. Throwing money at volatile assets without proper due diligence is gambling, not investing. Sarah and I build wealth through disciplined research and diversified portfolios. The irony of his comment wasn't lost on me. My 3 years of intensive research into blockchain technology market cycles and cryptocurrency fundamentals apparently counted as gambling, while my parents' decision to concentrate their entire retirement savings in a single stock represented disciplined investing. Uncle Frank enthusiastically shared details about his own traditional investment philosophy. His portfolio consisted entirely of municipal bonds issued by Michigan government entities, dividend-paying utility stocks, and certificates of deposit at Great Lakes Credit Union. Over 40 years, this conservative approach had generated steady but modest returns that funded his comfortable retirement. Young people today want instant gratification, he lectured while gesturing toward me with his coffee cup. They see stories about overnight millionaires and think they can skip the hard work of building real wealth, but sustainable financial success requires patience, discipline, and proven strategies. What Uncle Frank didn't realize was that my cryptocurrency investments represented the most patient and disciplined approach to wealth building I'd ever attempted. Starting with $500 3 years ago, I had systematically educated myself about blockchain technology, studied market cycles, and gradually accumulated positions in Bitcoin, Ethereum, Solana, and several smaller projects I'd researched extensively. My process involved reading technical documentation, following development updates, analyzing adoption trends, and understanding the macroeconomic factors driving institutional cryptocurrency investment. I spent evenings after work studying financial reports, regulatory developments, and technological innovations that traditional investors completely ignored. The cryptocurrency portfolio that my family dismissed as play money now represented nearly twice my annual salary. Bitcoin had grown from experimental internet money into a globally recognized store of value. Ethereum's smart contract capabilities were revolutionizing finance, supply chain management, and digital ownership. The technological transformation I'd been studying was accelerating faster than most people could comprehend. But sharing these details would only invite more condescension from family members who viewed cryptocurrency through outdated stereotypes. Sarah's criticism became increasingly personal as the evening progressed, questioning not just my investment choices but my entire approach to life. "Look at yourself honestly, Cade," she said while her children played video games in the adjacent room. "You're 32 years old, living in a studio apartment, driving a car that's older than my daughter. When are you going to take real responsibility for your future?" Her words stung because they contained enough truth to wound deeply. I did live modestly compared to Sarah's suburban mansion. My Honda Civic did show its age compared to her luxury sedan. My job coordinating medical supply shipments lacked the prestige of her executive title, but I'd chosen this lifestyle deliberately to maximize my investment capital while minimizing expenses. The conversation took a darker turn when Sarah revealed information that made my blood run cold. Through my quiet eavesdropping, I learned that most of her celebrated stock wealth existed only on paper. The 50,000 shares she bragged about were actually stock options that vested gradually over several years. Her current liquid net worth was far less impressive than her confident presentation suggested. More troubling, she had convinced not just our parents, but Uncle Frank, Aunt Marie, and several family friends to invest their savings in Morrison Tech stock, based on her insider information about the pending acquisition. The ripple effects of her financial advice extended far beyond our immediate family into their broader social circle. I told the Johnsons next door about this opportunity, Uncle Frank mentioned casually. Harold's been looking for better returns on his retirement money since Margaret passed. They invested everything from her life insurance settlement. My heart sank as I realized how many people had concentrated their financial futures in Morrison Tech stock based on Sarah's professional recommendations. Elderly neighbors, family friends, and relatives who trusted her business expertise had abandoned diversified portfolios for single stock speculation disguised as sophisticated investing. The evening's most revealing moment came when I overheard Sarah whispering frantically to Brad in the kitchen. Their hushed conversation revealed concerning details about Morrison Tech's acquisition timeline and the pressure she faced from major shareholders to expedite the TechFlow deal. Blackstone Capital keeps calling about accelerating the due diligence process, Sarah said quietly. They want everything finalized before year-end. But some of the numbers from TechFlow don't add up perfectly. I'm supposed to present revised projections next week. Brad's response chilled me to the bone. Just massage the figures until they work. Blackstone didn't invest $670 million to watch this deal collapse over accounting details. Your promotion depends on making this acquisition happen. I pretended to wash dishes while processing the implications of what I'd just heard. Sarah's rapid career advancement appeared connected to Morrison Tech's relationship with Blackstone Capital, a major institutional investor with significant influence over corporate decisions. Her promotion to vice president coincided suspiciously with their massive stock purchase 6 months earlier. As family members prepared to leave, Sarah delivered her final blow to my already wounded ego. Standing in the foyer while everyone gathered coats and purses, she addressed me with the kind of public condescension that would echo in my memory for months. Cade, I hope tonight helped you understand the difference between real wealth building and internet gambling. She announced loud enough for everyone to hear. Maybe someday you'll be mature enough to appreciate how actual financial success works. Until then, keep playing with your little Bitcoin hobby while the adults handle serious investments. The family's laughter followed me to my car as I drove home through Detroit's empty streets. But their mockery couldn't shake my confidence in the research that guided my investment decisions. While Sarah celebrated her paper wealth, and my relatives planned spending sprees with anticipated stock gains, I quietly monitored cryptocurrency markets that continued climbing toward new heights. My $85,000 portfolio represented 3 years of disciplined accumulation and patient research. Unlike my family's concentration in Morrison Tech stock, my cryptocurrency holdings were distributed across multiple projects with different risk profiles and technological applications. I understood the volatility they dismissed as proof of cryptocurrency's illegitimacy was actually evidence of a rapidly evolving market finding its true value. The drive home gave me time to process the evening's emotional assault and plan my response to what I suspected was coming. Sarah's insider information about Morrison Tech, combined with the pressure from Blackstone Capital and the rushed acquisition timeline, suggested a dangerous situation developing behind the scenes of my family's financial celebration. Friday morning arrived with deceptive calm as my family members scattered across Metro Detroit for their traditional Black Friday shopping expeditions. While Sarah browsed luxury boutiques with our mother and Aunt Marie, spending money she hadn't actually earned yet, I used my vacation day to conduct the most important research of my investing career. Morrison Tech's recent quarterly reports revealed troubling patterns that contradicted Sarah's confident predictions about the company's future. Revenue growth had slowed significantly over the past 8 quarters, declining from 37% annual increases to barely 14%. Their largest clients were reducing orders, citing budget constraints and increased competition from overseas software developers. The financial documents painted a picture of a company struggling to maintain its market position, despite aggressive marketing claims about revolutionary technology. Morrison Tech's debt had nearly tripled during their expansion phase, reaching $430 million as they acquired smaller competitors and invested heavily in research and development. Their interest payments alone consumed 18% of quarterly revenue. TechFlow Solutions. The acquisition target that Sarah described as a game-changing opportunity carried its own set of alarming red flags. Buried deep in SEC filings, I discovered that TechFlow's customer base consisted largely of shell companies and subsidiary organizations with questionable financial backing. Their celebrated artificial intelligence platform appeared to be repackaged open-source software marketed under proprietary branding. More disturbing, TechFlow's executive team had been quietly updating their LinkedIn profiles and attending industry networking events despite the pending acquisition. Key personnel in critical technical positions were actively interviewing with competitors, suggesting they lacked confidence in their own company's future prospects. The research process transported me back to the intensive studying that had guided my cryptocurrency investments. Hours spent reading SEC filings, analyst reports, and financial statements felt familiar from my blockchain research. The same analytical skills that helped me identify promising cryptocurrency projects now revealed dangerous vulnerabilities in traditional corporate structures. Blackstone Capital's involvement in Morrison Tech added another layer of complexity to an already concerning situation. This notorious activist investor specialized in purchasing large stakes in undervalued companies, implementing aggressive restructuring strategies, then selling their positions after extracting maximum short-term profits. Their 6-month timeline for Morrison Tech perfectly matched their typical pump-and-dump investment cycle. My logistics background proved unexpectedly valuable as I traced Morrison Tech's supply chain relationships and customer dependencies. Medical device manufacturers, software distributors, and technology integrators all showed signs of reducing their partnerships with Morrison Tech in favor of more cost-effective alternatives. The foundation of their business model was eroding faster than their financial reports acknowledged. Meanwhile, my cryptocurrency portfolio continued its steady climb toward new heights. Bitcoin's price stability during recent market turbulence demonstrated growing institutional confidence in digital assets as inflation hedges and portfolio diversifiers. Ethereum's network activity surged as developers launched innovative applications that traditional financial institutions were beginning to integrate into their operations. The contrast between cryptocurrency's technological advancement and Morrison Tech's outdated business practices became increasingly apparent through my research. While Sarah celebrated her company's pending acquisition of artificial intelligence capabilities, blockchain networks were already implementing sophisticated smart contract systems that automated many of the processes TechFlow claimed to have invented. Sunday's family brunch at our parents' house provided additional intelligence about Morrison Tech's internal dynamics and Sarah's growing pressure from Blackstone Capital. The gathering included fewer relatives than Thanksgiving, creating opportunities for more intimate conversations that revealed concerning details about the acquisition timeline. Blackstone's representatives have been calling daily about expediting the TechFlow integration, Sarah confided to Brad while they helped our mother prepare coffee. They want signed contracts by December 15th, but our legal team keeps finding issues with TechFlow's intellectual property claims. Brad's response revealed his understanding of the pressure Sarah faced. Blackstone didn't become billionaires by accepting delays and excuses. If they want December 15th, then December 15th is what happens. Period. Their conversation confirmed my suspicion that Sarah's career advancement depended entirely on delivering results for Blackstone Capital's timeline, rather than conducting proper due diligence for Morrison Tech's long-term success. She was being used as a corporate pawn to facilitate a financial scheme that would ultimately benefit external investors at the expense of her own company. The moral complexity of my situation intensified as I watched our parents discuss their Morrison Tech investment with excited anticipation. They planned to use their expected profits to fund long-delayed home improvements, travel dreams they'd postponed during their working years, and increased financial support for their grandchildren's education expenses. Sarah's insider knowledge gives us advantages that ordinary investors never get, our father explained proudly. were finally positioned to build real wealth instead of just surviving paycheck to paycheck. Their touching faith in Sarah's expertise made my discovery of Morrison Tech's vulnerabilities even more heartbreaking. Robert and Linda had worked their entire lives with careful budgeting and conservative investing, building a modest but secure retirement fund through decades of patience and discipline. Now they'd abandoned those proven principles for speculation disguised as sophisticated investing. Uncle Frank's enthusiasm about his Morrison Tech investment added another layer of family tragedy to the developing crisis. He'd convinced Harold Johnson, his widowed neighbor, to invest Margaret's life insurance settlement in Morrison Tech stock based on Sarah's professional recommendation. An entire network of elderly family friends had concentrated their retirement security in a single company's success. My cryptocurrency research had taught me valuable lessons about risk management and portfolio diversification that my family desperately needed to understand. But my previous attempts to share financial insights had been dismissed as amateur enthusiasm from someone who didn't understand real investing. The irony of their situation would have been amusing if the consequences weren't so potentially devastating. Monday evening brought the first concrete warning sign that Morrison Tech's acquisition might face serious obstacles. Medcore Industries, representing 38% of Morrison Tech's annual revenue, announced they were evaluating alternative software partnerships to optimize operational efficiency and reduce costs. Their contract renewal meeting, previously scheduled for January, had been moved to December 15th. The timing was too coincidental to ignore. If Medcore terminated their relationship with Morrison Tech during the same week, Blackstone Capital demanded TechFlow acquisition completion. The resulting financial chaos would destroy both the deal and Morrison Tech's stock price. Sarah's career, my parents' retirement savings, and dozens of family friends' financial security hung in the balance of a single client meeting. My attempts to warn family members about potential risks continued to meet resistance rooted in their perception of my financial credibility. When I suggested our parents consider diversifying their Morrison Tech position, our father dismissed my concerns as jealousy disguised as helpful advice. "Sarah knows what she's talking about, son," he replied with patient condescension. "She's the business expert in this family. Your heart's in the right place, but leave the sophisticated investing to people with proper education and experience." The conversation ended with familiar frustration, as my research-based concerns were attributed to sibling rivalry rather than legitimate financial analysis. But I continued documenting every warning I attempted to share, creating evidence that I'd tried to protect my family from the disaster I could see approaching. Tuesday brought the most alarming discovery of my entire investigation. TechFlow's CEO, Jonathan Mitchell, had been systematically selling his personal shareholdings for the past 6 weeks, disguising the transactions as estate planning diversification in SEC Form 4 filings. If the CEO of the acquisition target was dumping stock before his own company's purchase, the deal was definitely more fraudulent than my family realized. Sarah's call that evening confirmed my worst fears about Morrison Tech's deteriorating situation. Her voice carried stress and exhaustion that contradicted her usual confident demeanor as she shared news about unexpected executive departures. "Our CFO resigned today, citing strategic differences with the board," she said quietly. "The stock dropped 4% in after-hours trading, and Blackstone's people want explanations about our leadership stability." The collapse was beginning sooner than I'd anticipated, but my family remained trapped in their celebration of paper wealth that existed only as long as Morrison Tech's stock price stayed artificially inflated. My cryptocurrency portfolio had grown to $135,000. During the same period, my family's traditional investments approached catastrophic losses. Wednesday morning's pre-market trading showed Morrison Tech stock exhibiting unusual volatility patterns that confirmed my worst suspicions about Blackstone Capital's exit strategy. Large block sales, disguised as routine institutional trading, were slowly bleeding the stock price lower while maintaining an appearance of normal market activity. I spent my remaining vacation days conducting the most intensive financial investigation of my life, using every analytical skill I'd developed through 3 years of cryptocurrency research. The deeper I dug into Morrison Tech's corporate structure and Blackstone Capital's investment timeline, the clearer it became that my family had walked into a sophisticated financial trap. The Securities and Exchange Commission filings revealed Blackstone Capital's true intentions through carefully worded legal documents that most retail investors would never think to examine. Their initial stock purchase 6 months earlier had included provisions for strategic restructuring opportunities and optimized exit timing based on market conditions and acquisition completion. Translation: they planned to sell their entire position immediately after the TechFlow acquisition announcement, profiting from the temporary stock price spike while leaving long-term shareholders to absorb the inevitable crash when the deal's fraudulent foundation became apparent. TechFlow Solutions' financial statements contained accounting irregularities that would have raised red flags for any competent due diligence team. Their customer base included dozens of shell companies with identical incorporation addresses, suggesting artificially inflated revenue figures designed to support their acquisition valuation. Their proprietary artificial intelligence technology turned out to be rebranded open-source software, available free to any developer. The investigation revealed how Sarah had unknowingly become a crucial component in Blackstone Capital's scheme. Her promotion to Vice President of Strategic Development coincided perfectly with their stock purchase, positioning her to expedite the acquisition process while providing insider credibility for their pump-and-dump operation. Blackstone's representatives had been pressuring Sarah to accelerate due diligence timelines, ignore accounting discrepancies, and present optimistic projections that justified TechFlow's inflated purchase price. Her career advancement depended entirely on delivering results for their financial timeline, rather than protecting Morrison Tech's long-term interests. My cryptocurrency portfolio provided a stark contrast to my family's precarious financial position. While they concentrated everything in a single manipulated stock, my holdings were distributed across Bitcoin, Ethereum, Solana, and several smaller projects with different technological applications and risk profiles. The diversification they criticized as gambling was actually protecting me from the exact type of catastrophic loss they were about to experience. Bitcoin's continued institutional adoption demonstrated the cryptocurrency market's growing maturity and legitimacy. Major corporations like Tesla, MicroStrategy, and Square had added Bitcoin to their treasury reserves, treating it as a hedge against inflation and currency devaluation. Ethereum's smart contract capabilities were revolutionizing financial services, supply chain management, and digital asset ownership. The technological innovation driving cryptocurrency growth represented genuine advancement in financial infrastructure, unlike TechFlow's marketing claims about revolutionary artificial intelligence that was actually recycled code. My investments were based on understanding emerging technology that would transform multiple industries over the coming decades. Thursday evening brought Sarah's most desperate attempt yet to secure additional family investment in Morrison Tech stock. She called requesting a loan to purchase more shares before the TechFlow acquisition announcement, claiming insider knowledge about the deal's incredible profit potential. Blackstone Capital offered me additional stock options if I can encourage more family investment, she revealed during our phone conversation. They want to maximize retail participation before the acquisition news breaks. This is our chance to multiply our money several times over. Her request confirmed that Blackstone was actively seeking additional retail investors to absorb their position when they executed their planned exit strategy. They needed fresh capital flowing into Morrison Tech stock to provide liquidity for their massive sell order without crashing the price immediately. I declined Sarah's loan request, citing my own investment commitments in cryptocurrency, which provoked another lecture about my financial immaturity and failure to recognize legitimate opportunities. But her desperation was becoming apparent even through her continued condescension. Friday brought the final piece of evidence that convinced me Morrison Tech's collapse was imminent. Harold Johnson, Uncle Frank's neighbor who'd invested his late wife's life insurance money, called our family with concerning news about his Morrison Tech research. Harold had discovered that Morrison Tech's largest client, Medcore Industries, was actively negotiating with overseas software developers about replacing their current systems. The 38% revenue dependency that Morrison Tech's financial reports acknowledged was about to disappear entirely, leaving the company unable to support their debt obligations or maintain current operations. "Something doesn't add up about this acquisition," Harold told Uncle Frank during their conversation. "Why would TechFlow sell themselves to a company that's about to lose their biggest customer, unless they know something we don't about Morrison Tech's real financial condition?" Harold's intuitive skepticism impressed me more than my family's blind faith in Sarah's insider knowledge. An elderly retiree with no formal business education had identified the same red flags that my intensive research had uncovered, while supposed financial experts continued celebrating their anticipated windfall. The weekend passed with increasing tension as Morrison Tech's stock price showed continued weakness, despite optimistic analyst coverage that I now realized was coordinated with Blackstone Capital's media manipulation strategy. Financial news outlets published glowing reports about the pending TechFlow acquisition, describing it as a transformational deal that would revolutionize the artificial intelligence industry. My research into financial media relationships revealed how Blackstone Capital had been placing strategic stories with business journalists providing exclusive access to corporate executives and insider information in exchange for favorable coverage. The positive analyst ratings and price targets that supported Morrison Tech's inflated valuation were orchestrated components of their exit strategy. Sunday evening's family group text chain showed relatives discussing additional Morrison Tech purchases and planning major expenses based on their anticipated stock profits. Cousin Derek announced he'd taken a second mortgage on his house to invest more money. Aunt Marie mentioned liquidating her late mother's jewelry collection to buy more shares. The scope of my family's financial exposure to Morrison Tech's inevitable collapse continued expanding as relatives abandoned conservative investing principles for speculation disguised as sophisticated opportunity. Their touching faith in Sarah's business expertise was about to cost them everything they'd worked their entire lives to build. My cryptocurrency holdings approached $150,000 as traditional markets showed increasing volatility and institutional investors sought alternative assets for portfolio protection. The imaginary internet money my family mocked was providing exactly the stability and growth they believed could only come from traditional investments. Monday brought Morrison Tech's most ominous development, yet the resignation of their chief technology officer citing fundamental disagreements about product development strategy and market positioning. His departure eliminated the last remaining executive with actual technical expertise in the company's leadership structure. The timing of his resignation just 2 weeks before the planned TechFlow acquisition announcement suggested he'd discovered the fraudulent nature of the deal and refused to participate in misleading shareholders about its prospects. His replacement was a Blackstone Capital consultant with no software development background, but extensive experience in corporate restructuring. Sarah's voice betrayed genuine panic when she called Tuesday evening to discuss the CTO's unexpected departure and its potential impact on the acquisition timeline. Blackstone Capital's representatives were demanding explanations about Morrison Tech's leadership stability while simultaneously pressuring her to accelerate the deal completion schedule. "They want signed contracts by Thursday instead of December 15th, she revealed during our conversation. "Legal says we need more time for due diligence, but Blackstone won't accept any delays. I don't understand why they're rushing everything." I understood perfectly why Blackstone Capital was accelerating their timeline. Medcore Industries' contract termination meeting was approaching rapidly, and Morrison Tech's stock price needed to crash after Blackstone completed their exit, rather than before their selling opportunity. The investigation had revealed every component of a sophisticated financial crime that would devastate my family's savings, while enriching institutional investors who understood how to manipulate retail sentiment. My only remaining question was whether I could find a way to protect the people I loved without destroying my relationship with Sarah, who remained unaware of how she was being used. Wednesday morning arrived with an eerie sense of anticipation as financial markets opened to Morrison Tech trading, near its 52-week high of $87 per share. The artificial optimism supporting the stock price reminded me of cryptocurrency bubble peaks I'd studied, where unsustainable speculation created brief moments of euphoria before devastating crashes. My parents called early to share their excitement about their Morrison Tech investment gaining 12% since Thanksgiving dinner. Their $120,000 position had grown to approximately $134,000 on paper, representing the largest single-month gain in their investment history. Sarah was absolutely right about this opportunity, our mother said with genuine gratitude. We've already made more profit in 3 weeks than our old mutual funds generated in entire years. This could change everything about our retirement plans. Their touching enthusiasm broke my heart because I knew their celebration would end within hours. But my previous attempts to warn them had been dismissed as jealousy, leaving me helpless to prevent the financial destruction approaching their retirement security. Uncle Frank's call brought even worse news about the expanding scope of family and community investment in Morrison Tech stock. He'd convinced 3 additional neighbors to invest their retirement savings after Sarah's Thanksgiving announcement. The Kowalski family next door had invested $85,000. The Patel family across the street contributed $63,000. Even elderly Mrs. Chen, who lived alone since her husband's death, had invested her late husband's pension fund. Everyone's grateful for Sarah's insider knowledge, Uncle Frank explained proudly. We're finally positioned to build real wealth instead of just surviving on fixed incomes. This could fund vacations we never thought we'd afford and leave something meaningful for our grandchildren. The community trust in Sarah's financial expertise created a devastating multiplier effect for the coming crash. Dozens of families had concentrated their life savings in Morrison Tech stock based on her professional recommendation and supposed insider access to corporate information. Cousin Derek's enthusiasm reached dangerous levels as he announced plans to leverage his small business assets for additional Morrison Tech purchases. His plumbing company, built over 15 years of hard work and customer relationships, was being used as collateral for stock speculation that would destroy everything he'd created. Sarah explained how the TechFlow acquisition will triple our investment within months, Derek said during his call. I'd be crazy not to maximize my position before the announcement. This is our family's ticket to real financial freedom. His faith in Sarah's business judgment ignored the fundamental rule about never investing money you can't afford to lose. But Derek saw Morrison Tech stock as guaranteed profit rather than speculative risk, thanks to Sarah's confident presentations about her insider knowledge and corporate connections. My cryptocurrency portfolio provided a sobering contrast to my family's dangerous concentration strategy. While they bet everything on a single manipulated stock, my holdings remained diversified across multiple projects with different risk profiles and technological applications. Bitcoin, Ethereum, Solana, and several smaller cryptocurrencies gave me exposure to various aspects of the blockchain revolution without catastrophic single point of failure risk. The portfolio had grown to $148,000 through patient accumulation and research-based selection rather than speculation on insider tips. Each position represented months of studying technology, analyzing market trends, and understanding long-term adoption patterns that traditional investors completely overlooked. Wednesday afternoon brought my final opportunity to attempt protecting my family from the disaster I could see approaching. I drove to my parents' house in Bloomfield Hills carrying printed research about Morrison Tech's financial vulnerabilities, Blackstone Capital's investment history, and TechFlow Solutions' fraudulent revenue claims. The conversation lasted 3 hours and accomplished absolutely nothing except reinforcing my family's perception that I was motivated by jealousy rather than legitimate concern. Robert and Linda sat patiently while I presented evidence of accounting irregularities, executive departures, and client contract terminations. They nodded politely, then dismissed everything as misguided analysis from someone who lacked proper business education. Cade, your heart's in the right place, but you're not seeing the big picture, our father explained with paternal patience. Sarah has access to information that outside investors never see. She wouldn't risk her own career and our retirement savings on anything that wasn't absolutely solid. Our mother added her perspective with gentle concern. Maybe you're spending too much time reading negative articles about successful companies. There's always someone trying to spread fear about profitable investments to drive prices down so they can buy cheaper. Their touching faith in Sarah's judgment created an impenetrable barrier to rational financial discussion. No amount of evidence could overcome their emotional investment in believing that their daughter possessed special knowledge that guaranteed investment success. Sarah's arrival during my presentation transformed the conversation from patient dismissal to active hostility. She accused me of trying to sabotage her success out of sibling rivalry, suggesting that my warnings were motivated by resentment about her career achievements rather than genuine concern for our family's financial welfare. "You've always been jealous of my success," she said with angry conviction. "Now you're trying to undermine confidence in my professional judgment because you can't stand seeing me win for once. This is pathetic even for you." Her accusation stung because it contained enough emotional truth to wound deeply. I had resented Sarah's advantages throughout our childhood and adult years, but my warnings about Morrison Tech were based on objective research rather than subjective emotions, though distinguishing between the two had become impossible for our family. The evening ended with frustrated silence as I realized that protecting my family from financial disaster was beyond my capabilities. They'd made their investment decisions based on trust in Sarah's expertise, and changing their minds would require admitting that their faith had been misplaced. Thursday morning brought Sarah's most desperate phase as Blackstone Capital increased pressure for immediate tech flow acquisition completion. She called multiple times throughout the day, sharing details about boardroom conflicts, legal obstacles, and timeline acceleration that confirmed my worst predictions about the deal's fraudulent foundation. "Blackstone wants contracts signed by tomorrow afternoon instead of December 15th, she revealed during our final conversation. "Legal says we're rushing due diligence, but Blackstone threatens to pull their financing if we delay any longer. I don't understand why everything has to happen so fast." Her confusion about Blackstone's timeline urgency demonstrated how completely she'd been manipulated by sophisticated financial criminals. They needed Morrison Tech's stock price to remain elevated just long enough to complete their exit strategy before the inevitable crash when market participants discovered the acquisition's fraudulent basis. Thursday evening brought Morrison Tech's final warning signal, as after-hours trading showed unusual volume patterns and subtle price weakness that suggested large institutional selling. Blackstone Capital was beginning their exit strategy while maintaining enough buying pressure to prevent immediate price collapse. My cryptocurrency holdings approached $155,000 as global markets showed increasing volatility and traditional investors sought alternative assets for portfolio protection. The technological revolution that my family mocked as internet gambling was providing exactly the stability and growth they believed could only come from conventional investments. Friday morning arrived with deceptive calm as Morrison Tech opened trading at $89 per share, reaching new highs that masked the sophisticated selling pressure building beneath the surface. My family's celebration would reach its peak just hours before their financial destruction began. The stage was perfectly set for Thanksgiving dinner's devastating conclusion. Sarah's triumph would transform into tragedy within moments of her most confident declaration about Morrison Tech's guaranteed success. My family's faith in traditional investing wisdom was about to collide with the harsh reality of institutional manipulation and corporate fraud. Thursday morning's pre-market activity showed Morrison Tech trading at $88 per share, just $1 below its all-time high, as my family prepared for our second Thanksgiving gathering in 3 weeks. The artificial strength masking institutional selling pressure created perfect conditions for the financial disaster that would unfold within hours. I arrived at our parents' house early to help with meal preparation, carrying the emotional weight of knowledge that would soon devastate everyone I loved. The research I'd conducted over the past month had revealed every component of Blackstone Capital's pump-and-dump scheme, but my family remained trapped in their celebration of paper wealth. Sarah's arrival in a brand new BMW X5 lease financed through margin loans against her Morrison Tech stock options demonstrated how completely she'd bought into the illusion of permanent prosperity. Her designer clothing, expensive jewelry, and carefully planned gifts for everyone represented spending based on anticipated profits rather than actual cash flow. "I wanted to celebrate our family's financial success," she announced while distributing expensive bottles of wine and luxury gift boxes. "This is just the beginning of what Morrison Tech's acquisition will make possible for all of us." Emma and Jake, her teenage twins, bubbled with excitement about the European vacation Sarah had promised to fund with her stock windfall. Brad discussed their plans to upgrade from their current 4-bedroom colonial to a lakefront estate in Traverse City. The children's private school tuition, previously a source of budget stress, would become effortless with Sarah's anticipated millions. Uncle Frank arrived with 3 neighbors he'd convinced to invest in Morrison Tech stock: Harold Johnson with his life insurance settlement, the Kowalski family with their retirement savings, and Mrs. Chen with her late husband's pension fund. Their presence transformed our family gathering into a community celebration of shared financial good fortune. "Sarah's the best thing that ever happened to our retirement planning," Harold declared while shaking hands with our father. "Margaret would be so grateful that her life insurance money is finally working for our future, instead of just sitting in low-interest savings accounts." The Kowalski family brought their own bottle of champagne to toast Sarah's business brilliance. Mr. Kowalski, who'd worked 38 years at General Motors before retiring, praised her sophisticated investment guidance that gave ordinary people access to insider opportunities usually reserved for wealthy professionals. During appetizers and early conversation, Sarah's confidence reached new heights as she shared updates about Morrison Tech's board meeting scheduled for later that afternoon. The TechFlow acquisition contracts were ready for final signatures, with trading resuming Monday morning after the weekend's due diligence completion. Blackstone Capital's representatives flew in from New York specifically for today's closing, she explained to our captivated audience. "This acquisition will revolutionize artificial intelligence applications across multiple industries. Our stock price will probably double within weeks of the announcement." Her calculations showed 50,000 stock options becoming worth approximately $4.4 million at conservative price targets. The mathematics seemed compelling to family members who lacked experience with speculative bubbles and institutional manipulation schemes. Uncle Frank raised his beer bottle in an elaborate toast to Sarah Henderson, the family's Warren Buffett, who turned our modest savings into real wealth through professional expertise and insider knowledge. The gathered relatives erupted in applause and congratulations that made my stomach clench with anticipatory dread. Their genuine gratitude for Sarah's financial guidance would transform into devastation within hours, when Morrison Tech's artificial prosperity collapsed under the weight of its fraudulent foundation. I continued eating my turkey in silence while monitoring Morrison Tech's real-time stock price through my phone. Trading volume showed unusual patterns suggesting coordinated selling pressure masked by algorithmic distribution designed to prevent immediate price collapse. Blackstone Capital was executing their exit strategy with sophisticated precision. Brad amplified the celebration by explaining how institutional quality investment opportunities like Morrison Tech separated sophisticated investors from amateur speculators who wasted money on volatile assets. His confident dismissal of cryptocurrency as basement dweller fantasies drew knowing chuckles from relatives who viewed my investment choices as proof of financial immaturity. "Sarah and I build wealth through disciplined research and professional networking," Brad declared while cutting his second helping of turkey. "We understand how real markets operate and position ourselves accordingly. That's why we avoid gambling on internet fads that could disappear overnight." The irony of his comment about gambling would become apparent within minutes, but his audience absorbed his wisdom about conservative investing strategies that generated consistent returns through proven methodologies. Their faith in traditional financial approaches made Sarah's insider access seem like the natural evolution of sophisticated wealth building. What my family couldn't see was my cryptocurrency portfolio continuing its steady growth even during traditional market volatility. While they concentrated everything in a single manipulated stock, my diversified holdings in Bitcoin, Ethereum, and other blockchain projects had reached $162,000 through patient accumulation and technological understanding. The afternoon's most emotional moment came when our parents presented their calculations about Morrison Tech's impact on their retirement security. Their $120,000 investment had grown to approximately $148,000 on paper, with projections showing potential growth to $300,000 after the TechFlow acquisition announcement. "We'll finally be able to travel like we always dreamed," our mother said with tears of gratitude. Sarah's guidance gave us financial freedom we never thought possible at our age. We can help with the grandchildren's college expenses and maybe even leave something meaningful in our wills. Their touching faith in Sarah's business judgment made the coming disaster even more heartbreaking. Robert and Linda had worked their entire lives with careful budgeting and conservative investing principles, building modest security through decades of patience and discipline. Now they'd abandoned proven strategies for speculation disguised as insider opportunity. The moment of reckoning arrived at exactly 4:37 in the afternoon, just as Sarah reached the crescendo of her most confident speech about Morrison Tech's guaranteed success and her family's financial transformation through professional investment guidance. "Still playing with your little investments?" she asked me with sisterly condescension that drew knowing smiles from our relatives. "Maybe someday you'll understand how real wealth building works instead of gambling on imaginary internet money that could disappear overnight." The family's laughter at my expense was interrupted by urgent pounding on our front door. Sarah's assistant Katie burst through the dining room entrance without waiting for permission, her face pale as winter snow and her hands trembling with panic about the devastating news she had to deliver. "Ma'am, I'm so sorry to interrupt, but this couldn't wait," Katie said with a voice that barely controlled her terror. Blackstone Capital just sold their entire position. $670 million worth of shares hit the market 15 minutes ago. The stock price is in free fall. Sarah's wine glass slipped from her fingers, shattering against our parents' hardwood floor, as the implications of Katie's announcement penetrated her consciousness. The celebration that had defined the past 3 weeks was ending with brutal finality, as Morrison Tech's artificial prosperity collapsed in real time. "That's impossible," Sarah whispered while trying to process information that contradicted everything she'd believed about Blackstone Capital's commitment to Morrison Tech's long-term success. They were financing the acquisition. They wouldn't sell before the deal closes. Katie's continued updates painted a picture of complete financial devastation unfolding across multiple platforms simultaneously. Morrison Tech's stock price had dropped from $89 to $74 per share within minutes of Blackstone's selling announcement. Trading volume exploded as other institutional investors rushed to exit their positions before further decline. "The TechFlow acquisition is officially canceled," Katie reported while consulting her phone for continuous updates. TechFlow's board cited insurmountable due diligence concerns and fundamental disagreements about financial projections in their withdrawal announcement. The dining room fell silent except for the sound of Sarah's sobbing as she realized her career, her family's financial security, and her own sense of professional identity were disappearing with Morrison Tech's plummeting stock price. The acquisition that was supposed to guarantee her success had been revealed as fraudulent manipulation, designed to enrich Blackstone Capital at everyone else's expense. Uncle Frank grabbed his chest as the reality of his financial losses penetrated his understanding. His retirement savings, his neighbor's investments, and his widow friend's life insurance money were evaporating in real time as Morrison Tech's stock continued its relentless decline toward more realistic valuations. "How is this possible?" Harold Johnson asked with the confusion of someone who'd trusted professional advice that seemed credible and well-researched. Sarah said this was guaranteed profit based on insider information. How could everything change so quickly? Brad's face showed the particular horror of someone who understood financial markets well enough to recognize the scope of disaster unfolding around his family. His confident explanations about sophisticated investing strategies had encouraged relatives to concentrate their savings in a single stock that was now destroying their financial security. As Morrison Tech's stock price continued falling through $60, then $55, then $50 per share, the mathematical reality of my family's losses became impossible to deny. Sarah's stock options worth over $4 million that morning had lost more than half their value within 30 minutes of Blackstone Capital's exit announcement. My parents' retirement savings had dropped from $148,000 to approximately $93,000, while we sat paralyzed by the speed of their financial destruction. Uncle Frank's investment losses approached 40% of his retirement security. The community of elderly neighbors who'd trusted Sarah's advice faced poverty instead of the financial freedom they'd been promised. Emergency news bulletins began reporting SEC investigation announcements into Morrison Tech's accounting practices, TechFlow Solutions' revenue inflation, and Blackstone Capital's potential securities fraud. The acquisition that Sarah had described as revolutionary business opportunity was being exposed as criminal conspiracy designed to steal money from retail investors. In the midst of my family's financial devastation, I quietly checked my cryptocurrency portfolio on my phone. While Morrison Tech's stock destroyed traditional investment principles, my imaginary internet money had grown to $168,000, providing exactly the stability and growth that my family believed could only come from conventional approaches. The contrast between their faith in professional expertise and my research-based investment strategy could not have been more stark. Their sophisticated investing had led to catastrophic losses, while my gambling on emerging technology had generated consistent returns and portfolio protection. Sarah's complete emotional breakdown marked the end of her role as our family's financial authority. The sister who'd mocked my cryptocurrency investments for 3 years was now facing personal bankruptcy and professional destruction, while my patience and research-based approach continued generating positive results. The Thanksgiving dinner that was supposed to celebrate our family's financial transformation had become a wake for their retirement security and my sister's career. But their disaster was about to become the foundation for healing growth and a deeper understanding of what real wealth actually means. Friday morning brought Morrison Tech's continued collapse as the stock opened at $31.57 per share, representing a 64% decline from Thursday's pre-market high. The overnight selling pressure from institutional investors fleeing their positions had accelerated the company's descent toward bankruptcy and potential delisting from major exchanges. Sarah's complete financial ruin became apparent as margin calls from her brokerage accounts demanded immediate cash deposits to cover her leveraged positions. The BMW lease she'd signed in celebration would be surrendered within days. The lake house down payment was permanently lost. Her children's private school tuition became impossible to maintain on her reduced Morrison Tech salary. The scope of family financial devastation extended far beyond individual stock losses, as relatives calculated the compound effects of their investment concentration. Uncle Frank faced foreclosure proceedings on his Bloomfield Hills home. The Kowalski family contemplated bankruptcy protection. Harold Johnson's widow's benefits would no longer cover his assisted living expenses. But instead of gloating over my family's misfortune or demanding acknowledgement of my superior investment judgment, I chose a different path that demonstrated the values cryptocurrency research had taught me about decentralized community support and collaborative problem-solving. My first action was quietly using cryptocurrency profits to address my family's most urgent financial needs. I converted $25,000 from my Bitcoin holdings to cover Uncle Frank's mortgage payment, preventing immediate foreclosure while he developed longer-term recovery strategies. Another $15,000 helped my parents meet their essential monthly expenses during the crisis period. "I don't understand why you're helping us after we mocked your investments for so long," Uncle Frank said with genuine humility when I delivered his mortgage payment. "You warned us about the risks, and we dismissed everything you said as jealousy. We don't deserve your kindness." My response reflected lessons I'd learned about financial literacy and family responsibility. Money should serve people, not divide them. I invested in cryptocurrency because I believed in the technology's potential to create more equitable financial systems. Using those profits to help our family reflects the collaborative spirit that makes blockchain networks successful. Sarah's transformation from arrogant executive to humbled sister required several months of difficult conversations, professional counseling, and gradual recognition of how completely she'd been manipulated by Blackstone Capital's sophisticated scheme. Her cooperation with SEC investigators helped federal prosecutors build criminal cases against the financial conspirators who'd used her as an unwitting accomplice. The investigation revealed that Sarah's promotion to vice president had been orchestrated specifically to provide Blackstone Capital with insider access to Morrison Tech's decision-making processes. Her rapid career advancement was never based on merit or expertise, but rather her usefulness in facilitating securities fraud that ultimately cost retail investors hundreds of millions of dollars. I was so proud of my business success that I never questioned why opportunities came so easily, Sarah admitted during one of our healing conversations. Blackstone Capital made me feel important and sophisticated while they used my position to steal money from our family and community. I should have listened to your warnings instead of dismissing them as brotherly jealousy. Her genuine apology acknowledged years of condescending behavior that had damaged our relationship and undermined my confidence in financial discussions. But more importantly, it represented her growing understanding of how intellectual humility and collaborative learning create better outcomes than individual arrogance and competitive superiority. The criminal justice system delivered appropriate consequences for the financial crimes that devastated my family and thousands of other retail investors. Blackstone Capital's managing partners received prison sentences ranging from 8 to 15 years for securities fraud, market manipulation, and conspiracy charges. Morrison Tech's compromised executives faced similar penalties for their roles in facilitating the pump-and-dump scheme. TechFlow Solutions leadership received the harshest sentences for creating fraudulent revenue reports and knowingly selling worthless intellectual property to unsuspecting acquisition targets. Their artificial intelligence platform was revealed as completely plagiarized code that provided no legitimate business value, despite elaborate marketing claims about revolutionary technology. Sarah's cooperation with federal investigators protected her from criminal prosecution, while providing crucial evidence for convicting the sophisticated criminals who'd orchestrated the scheme. Her detailed testimony about Blackstone Capital's pressure tactics and timeline manipulation helped prosecutors demonstrate the premeditated nature of their securities fraud conspiracy. The recovery process for my family's financial security took nearly 2 years, but ultimately strengthened our relationships and improved our collective understanding of sound investment principles. Sarah found new employment with a smaller technology company that valued integrity over profit maximization, rebuilding her career through honest work rather than manipulative schemes. My parents developed diversified retirement portfolios that reflected lessons learned about concentration risk and the importance of independent research rather than blind trust in insider recommendations. Uncle Frank's recovery included financial literacy education that helped him understand how professional-sounding advice can mask dangerous speculation. Most importantly, our family developed new appreciation for different forms of intelligence and alternative approaches to wealth building. My cryptocurrency investments were no longer dismissed as gambling, but recognized as research-based positions in emerging technology with legitimate applications across multiple industries. The vindication of my investment strategy became even more apparent as Bitcoin and Ethereum continued their institutional adoption throughout the following year. Major banks began offering cryptocurrency custody services. Corporate treasuries added digital assets as inflation hedges. Pension funds started allocating portions of their portfolios to blockchain-based investments. My cryptocurrency holdings grew to over $300,000 within 18 months of Morrison Tech's collapse, demonstrating the power of patient research and technological understanding over speculation based on insider tips. The imaginary internet money my family had mocked provided financial independence that traditional investments had failed to deliver. Using this success to help others became my mission through establishing a nonprofit financial education organization focused on teaching working-class communities about alternative investment strategies and emerging technologies. The Henderson Foundation for Financial Literacy offered free courses about cryptocurrency blockchain applications and decentralized finance concepts that traditional institutions ignored. Sarah's participation in our educational programs demonstrated her genuine transformation from arrogant executive to humble collaborator. Her presentations about recognizing financial manipulation and understanding corporate fraud helped community members protect themselves from sophisticated schemes targeting retail investors. The Foundation's work reached hundreds of families throughout southeastern Michigan, providing financial literacy resources that emphasized independent research, risk management, and diversification principles that mainstream educational institutions rarely addressed. Our courses helped working-class individuals build wealth through patient accumulation, rather than speculation on insider tips. 1 year after Morrison Tech's collapse, our family's Thanksgiving gathering reflected profound changes in our relationships and financial understanding. Sarah's heartfelt gratitude for my support during her crisis period had replaced years of condescending dismissal. Our parents expressed pride in both children's different but valuable contributions to family welfare. Cade's research and patience saved our retirement security, our father acknowledged during his blessing. His willingness to help us despite our previous dismissal of his expertise demonstrates character that no amount of money can buy. We're grateful for his wisdom and generosity during our darkest financial period. The evening's most meaningful moment came when Sarah publicly credited my investment strategy and analytical capabilities that she'd ridiculed for years. Her acknowledgement represented not just personal apology, but recognition that intelligence manifests in many forms and deserves respect, regardless of traditional credentials. My brother's cryptocurrency research was more sophisticated and accurate than anything I learned in business school or corporate boardrooms, she announced to our extended family. His patience and humility while I mocked his investments showed wisdom that I completely missed until disaster taught me about real financial intelligence. Our uncle's recovery from near bankruptcy had taught him valuable lessons about diversification and independent thinking that he shared with community members facing similar financial challenges. His experience became a cautionary tale about the dangers of concentration investing and the importance of questioning professional advice that seems too good to be true. The broader lessons from our family's experience extended beyond individual financial strategies to encompass fundamental principles about wealth intelligence and human relationships. True prosperity comes from knowledge, humility, and collaborative support, rather than competitive superiority and individual accumulation at others' expense. Money amplifies character by revealing how people respond to both success and failure under pressure. Sarah's initial arrogance during her apparent triumph gave way to genuine humility and service to others after experiencing devastating losses. My patient support during their crisis period demonstrated values that sustained relationships beyond temporary financial circumstances. Intelligence manifests in many different forms, and dismissing alternative perspectives creates dangerous blind spots that prevent learning and adaptation. My unconventional approach to cryptocurrency investing proved more effective than traditional methods, precisely because it incorporated emerging technology that mainstream institutions ignored. The most important wealth is knowledge and relationships that survive market volatility and economic uncertainty. My family's bonds grew stronger through adversity and forgiveness than they ever were during periods of apparent prosperity based on false foundations. The cryptocurrency revolution that my family initially dismissed as worthless speculation continued transforming global financial systems through blockchain innovation, smart contract automation, and decentralized applications that traditional institutions began integrating into their operations. My early research and patient accumulation positioned me to benefit from technological advancement rather than market manipulation. The Henderson family's story demonstrates that success means lifting others up rather than standing on their failures, maintaining integrity under pressure rather than compromising values for temporary gains, and building wealth through understanding emerging opportunities rather than following conventional wisdom that no longer applies to rapidly changing economic conditions. As I reflect on the journey from humiliation to vindication, from family ridicule to respectful collaboration, I realize that my greatest achievement wasn't financial success, but maintaining character and compassion throughout a process that could have justified resentment and revenge. The cryptocurrency investments that seemed like little investments to my sister provided not just monetary returns, but the foundation for healing fractured relationships and building stronger community connections. The future belongs to people who combine technological understanding with human wisdom, who build wealth through patient research rather than speculation, and who use their success to create opportunities for others, rather than accumulating advantage at their community's expense. The blockchain revolution is just beginning, and those who understand its implications while maintaining ethical foundations will shape a more equitable financial future for everyone. What challenges have you faced when family members dismissed your investment research or financial insights? Have you ever discovered that unconventional approaches proved more successful than traditional strategies? Share your experiences in the comments below, and don't forget to like this story if it resonated with your own journey toward financial independence. Subscribe for more stories about overcoming adversity through patience and wisdom, and share this with anyone who might benefit from understanding how emerging technologies are revolutionizing wealth building for ordinary people willing to do their homework. Thank you for joining me on this emotional journey from mockery to vindication, from family division to healing collaboration. May your own investments, whatever form they take, reflect thoughtful research, patient accumulation, and the wisdom to maintain relationships that matter more than temporary financial success.